Oh, yikers. Facebook's down 7% after hours. Woo-hoo. What is going on here? Obviously, they just reported some earnings. We're going to take a little bit of a look in that and see why in the world this thing is down 7%. First off, let's just say I don't get it. These people are insane. It's insane. People are crazy, but let's look at the numbers, see if there's a reason for investors being scaredy poo-poo heads. Maybe there is. Sorry, that's rude. I didn't mean to say that. Wow. Okay, so what's their earnings look like? Well, okay. GAAP EPS of $2.56 a share. Okay, they beat on an EPS standpoint by 3 cents. Good. By the way, $2.56 a share. Printing money. How many times do I have to say it? Printing money. Revenue of $21 billion, up 25% year over year. Beats by $180 million. Okay. Quality. Those are good numbers. Am I insane? Those are good numbers. I love that. So all things considered, that's a pretty darn good quarter. Shares down. Shares are down though. What else do we have? So let's look at some of the breakdown here. So it topped profit expectations with revenues that grew nearly 25%. Of course, it's insane. It was a good quarter and a strong end of the year as our community and business continue to grow, says Mark Zuckerberg. You are, in fact, a robot, Mark Zuckerberg. Daily active users rose 9%. Okay. And monthly active users rose 8%. Okay. I mean, good. These are good numbers. Very good numbers. Family daily active people. People who use one or more of the family of Facebook apps. Facebook, Instagram Messenger, and or WhatsApp rose 11%. And the family monthly active people rose 9%. What the crap? It's a lot of people. What is going on out here? I just don't know what's going on. Along with the 25% revenue growth, cost and expenses rose 34%. And operating income rose 13%. So, hear me out here. Obviously, expenses rising 34% is a concern, right? But they rose expenses and still rose income 13% year over year. They rose expenses 34%, rose income. You'd think you'd see a decrease in operating income from that. No, sir. These guys put up a net income line of $7.35 billion. $7.35 billion in a quarter that they made in profit. Whew. Liquidity was $54.86 billion. Yikes. Headcount has gone up too. So they're hiring people too. And that's obviously some cost and expenses increase. What is going on? I mean, just looking through these numbers, we'll look through the slides in a second. These numbers look fantastic. I got to be honest. And I'm just telling you right now, my plan is, I don't see this sticking, by the way. I don't think it's going to be down 7%. I might be wrong. I won't be posting this until the next day. But I don't see this sticking through Thursday. I think this thing will turn positive because I think people are being a little crazy and investors are a little bit finicky sometimes. I think this will turn positive to the tune of around a small 1% maybe. Nothing major, but I don't see it. It's not going to be sticking down 7%. It's just not. It's not viable. And if it does, I'm going to be buying the heck out of some Facebook shares because the valuation here is absurd. It's absurdly cheap in terms of valuation. My gosh. Okay. That's fine. Again, just saying. Market cap is $636 billion, just saying. But guess what? They also authorized a $10 billion buyback program. $10 billion in share buybacks. So that'll increase the share price as is, but $10 billion in buybacks? My gosh. That's insane. What can I say? $10 billion in buybacks. I mean, they have that much cash. They're willing to just buy back shares, and each share is going to be worth more. So potentially you'll see a good annual price to earnings ratio for fiscal year 2020. You'd think. Potentially. I mean, I hope so at least. This is just wild stuff. I mean, look at these numbers. Look at these numbers. Look at these freaking numbers. Okay, good numbers, good numbers. Let's look at the slides, because this is frustrating me. Facebook, look at this logo. This is boring. I think it's because they changed their logo. That's why people are so upset. Look at this. There's no blue in this slide. That's probably the issue. They didn't release a slide that had color on them. They were not colorful enough for investors, so they sold out. These child investors here don't know how to grow up. Come on. Just look at the daily active users here. Look at this continual, consistent growth. It's just consistent. It's consistent growth. What can I say? Not only, in the rest of the world category, you see Asia Pacific increasing. Europe, guess what? Increasing. US and Canada, guess what? That's right, increasing. It's increasing. What do you want me to say? Good. Those are fantastic numbers. How about monthly active users? Yeah, more of the same. So more of the same. It's growth all around the board. And on top of it, this is a astonishing stat. You need to look at. You got to look at it. So here's the average revenue per user. Worldwide is gone up significantly. $8.52 per user worldwide. Average revenue per user. And it's opposed to last year when they did $7.37 per user last year. The numbers are rising. The numbers are rising. It's fantastic. Not just worldwide, but obviously every other sector they're rising too. So US, Canada, Europe, Asia Pacific, and the rest of the world. Boom. So worldwide, this is insane. Average revenue per user in the United States is freaking $41.41 per user. Gosh, that's insane. Europe, they're banking cash too. Obviously, rest of the world, kind of hurting just a little bit, but that's okay. That's insane. And this is all ad revenue too. Look at that. It's all in advertising. I don't know, guys. These numbers are good. These numbers are lovely. Family daily active users, again, continual growth. That's including just all the Facebook platforms, all the apps made or owned by Facebook. Monthly active users increasing as well. Average revenue per user for the family apps. Guess what? It's the same chart pretty much. Gosh dang. They're growing their advertising revenue significantly, as we expected. I mean, come on now. Revenue in millions. Here is what I'm trying to tell you here. Just look at the chart. What do you want me to say? I mean, year over year, they changed from $17 billion to $21 billion in a year. In a year, they grew freaking $4 billion worth of revenue. That's insane. In 2 years, guess what? 2 years worth. That's right. They grew $8 billion worth of revenue. This is absurd. And look at the increase in advertising revenue here too. That and just their other revenue. So it's going to be including stuff like Oculus, in-app purchases, stuff like that. So that's increasing as well. So revenue by user. Obviously, US and Canada is the majority there. A lot less in terms of, I would say, penalties they have to pay, everything of the sort. It's much cheaper to do business in the United States. So that's why they typically get a lot more revenue there, even though they have a less user base. It's just a lot easier to make money in the United States off these type of tech companies. But that's a lovely chart. I mean, no matter where you slice it, my gosh, I love these charts. Here's other revenue. Again, growing, and it's growing. Expenses as a percentage of revenue. So again, they increased cost and expenses. But, hear me out. Hear me out on this. Expenses as a percentage of revenue still decreased because they increased revenue just that much. Just that much. Don't want you to say. Income from operations. Again, they had a rough first quarter of the year. A lot of expenses, legal expenses, stuff like that. And that kind of fell into quarter two as well. But they went ahead, all right, and made $1.85 billion in income. That's right. And that's over $1 billion more than last year, this quarter last year. Insane numbers. I mean, they're insane. What else do you want me to say? Operating margin, not quite where it was a year ago, though. It's a little bit less, but a lot better than they had in the start of the year. Again, all due to legal expenses and an increase in cost because of those legal expenses. Income before income tax, obviously, $9 billion mark here. Love it. Effective tax rate of 20%. So the tax rate went up slightly over last quarter. Nothing wild. Net income, again, lovely chart. You see that growth. I love to see it. We typically tend to neglect the first 2 quarters just due to all those legal expenses. It's fine because they're back where they need to be. On an EPS standpoint, $2.56 versus $2.38 last year and $1.44 2 years ago. Man, that's crazy. Capital expenditures, obviously a major increase year over year. Pretty big increase for sure. There is your lovely appendix. There's the free cash flow. Love free cash flow. Love it. Again, sitting right around the $5 billion range. Nothing crazy there. Let's get rid of this data. And that's really what you need to see. That's all I'm telling you. That's what you need to know in terms of Facebook. Growing revenue. Growing cash flow. Growing everything. Growing everything. I don't know what people are doing. I expect this thing to turn positive. It's one of the best deals in the market right now. If this thing stays down tomorrow, I'll be picking up plenty because this is a ridiculous steal for a company. Something growing 25% year over year consistently, and continuing to grow revenue, per user, continuing to grow user base. It's absurd. This company is out of control, and they're only going to keep expanding with new projects. So just consider Facebook still my best. It's easiest money in the stock market right now, in my opinion. It's going to be buying Facebook. You'll be very happy 5 to 10 years down the road. No doubt about it. So that is Facebook earnings for you. Hope you enjoyed.